the Chief Analyst of Cabot, Small Cap Confidential, and Cabot Early Opportunities here with your Cabot Weekly Review. It is Friday, December 20th, and we are coming up on the 11 o'clock hour Eastern Time. And as you can see, the market is doing okay today. Bit of a bumpy week, definitely a risk-off sort of defensive mode, been building into the holidays. That kind of goes counter to the trend that a lot of us had been expecting, which was relatively smooth sailing through the end of the year and then potentially more volatility early in 2025 as people rebalance, do some selling to take some gains off the table and also defer paying capital gains on those till next year versus selling right now and having to pay capital gains on those gains this year. But in any event, a couple of other big picture things going on this week. Of course, we had the Fed out on Wednesday. We got the 25 basis point cut that so many of us had expected. On the other hand, a bit of a hawkish cut from the Fed. What happened really was the Fed's summary of economic projections, their SEP, now only calls for 2 rate cuts next year. That's down from previous expectations of 3 perhaps. And there's even some speculation that there may not be any cuts at all. So the Fed also increased their core PCED inflation forecast for next year from 2.2% to 2.5%. So that kind of indicates stickier inflation and a harder path to get to that 2% target. So we had that. We also had this looming government shutdown. That kind of developed late Tuesday night. This continuing resolution, the Congress needs to be approved or the government is going to shut down. That funding measure came up against a brick wall on Tuesday night, and a lot of resistance led by President-elect Trump, Elon Musk, Vivek Ramaswamy, and a lot of the other more conservative areas of the GOP. So there has been some chatter this morning about a potential Plan C on that, and I think that might be why the market is doing a little bit better than it was indicated to be, to do during the early morning pre-market hours. I think this kind of speaks to some of the potential risk of the incoming Trump administration, the tariff threats against the EU, just how is everything going to work, right? Is there going to be some drama? And this is kind of like our first little taste of that. So we'll just have to take that as it comes. Obviously, the market is doing okay with it right now, but a little bit bumpy. Another thing that is helping the market out this morning is the core PCE inflation number came in just slightly better than expected. And so I think that's helped to calm some nerves. So, but back to what happened. So on Wednesday, we're going to run quickly through some of these numbers. We saw the S&P 500, as you can see here, had a pretty bad day. Its worst day since August. The Russell 2000 had its worst day since June of 2022, and the VIX spiked by 74%. That was its largest one-day spike in history. So a little bit of an ugly day. You can see that the NASDAQ, it sold off as well, but it's held up here close to its 25-day moving average line. That's the green line. If we go to small caps, they took it a little bit harder. They had been below their 25-day moving average line already, but they fell through their 50-day, that's the red line here, on Wednesday, and have firmed up since, around this 1420 level, which goes back to, this is August. So what's that, 3 months or so? So we're back into that trading range. It'll be interesting to see if small caps can get back above. I certainly would expect that they would hold above 1375. But of course, wait and see mode. And of course, we have the 10-year yield, which has gone much higher than I think a lot of us expected. It was on a good trend in November, but bottomed out here at about 4.12%, and it's just taken off since, and better today, but Wednesday and Thursday kind of ugly, putting it above 4.5%, and that has also been a contributor to some of this risk-off mentality. All right, let's move on to stocks. So 3 stocks here that kind of all are part of the same story that I'm going to talk about. So LOAR Holdings, LOAR is the ticker symbol, 6.58 billion market cap. It's an aerospace company, and it has some exposure to the aftermarket part of Aerospace. Going to fast forward here to FTAI Aviation, another company that has a lot of exposure to the aftermarket, market cap of 13 billion. FTAI does a lot of work with engine maintenance. They're kind of like an asset manager for jet engines, and really smooth sailing for a long time. And then what happened? Well, it seems as though their stock started going south along with LOAR's when Boeing's strikes ended, and also when Boeing started to put out some decent numbers for production. So there's been a bit of like a sell LOAR, sell FTAI, buy Boeing situation that seems like it's developing. Whether or not FTAI's run is done or this is a buying opportunity, of course, we're going to look back at this and it's going to be obvious at that point. But right now it does seem as though it's bottoming out here right around 127. It's a pretty sizable drawdown here, especially relative to anything that we've seen over the last year and a half. So maybe a bit of a buying opportunity there. But I think it seems as though the Boeing buying opportunity is stronger, crossing above its 200-day line. I wouldn't say that I'm excited about Boeing stock. It's never been one that, I've been overly enthusiastic about. It's well outside of my area of focus. But, just going on the charts and following the story, it seems like a pretty good opportunity. All right, moving on to Service Titan. This is a company that just came public. It's a software company. Market cap now is 10 billion. Ticker symbol is TTAN. And the story here, so Service Titan has a software platform for trade-related service providers to help them manage their business. So we're talking things like plumbing, HVAC, roofing, painting, landscaping, pest control, that kind of thing. Company was founded in 2007. It's venture-backed. So according to the folks over at Renaissance Capital, who follow the IPO market pretty closely, it's a good sign to have a venture-backed company come public because it could signal some unlocking of a large backlog of venture-backed companies that are out there. Back to Service Titan, had a pretty strong debut, as you can see. It closed its first day at $101 a share, and that was up 42% from the IPO price of 71. Now, even that 71 offering price, that had increased a couple of times. The initial range was projected to be 52 to 57. That was increased from 65 to 67, and we got 71, and it closed up at 101. And it's done well since then. It's $105 stock right now. I wouldn't say this is something that I would, recommend going out to buy, but I'm very interested in the business, and so I put it on my radar. And we're going to get an update on January 9th. Management is going to report Q3 fiscal 2025 results, and they'll host their conference call, of course. Revenue grew by about 30% in the last fiscal year. Again, this is the third quarter report coming up. It looks as though we should expect revenue growth to be in the mid 20% range. And of course, I'm sure we'll get forecasts and a better idea of profitability and all that. But again, not one to race out and buy, but it's definitely one that I'm putting on my radar. And I think it speaks to a lot of more interest in the IPO market as well as in smaller software company stocks. All right, last but not least for this week, here is Astera Labs. Ticker symbol is ALAB. It's almost a 20 billion market cap company. And it's obviously been a pretty hot stock and, down a couple days earlier in the week, but overall generally pretty resilient. The company was started in 2017, and the goal was to develop networking technologies to connect the growing number of GPUs out there, graphics processing units. GPUs were designed with thousands of calculators working in parallel. Long story short, they were initially used for graphics and video rendering, but then with artificial intelligence models developing, engineers realized that GPUs worked fabulously for that. They can slice through mathematical equations very, very quickly and efficiently. Now the catch is that GPU clusters need to talk to each other at very, very high data rates. Now this is where Astera Labs comes in with its platform and its hardware. Its networking solutions address the data, the networking, and the memory bottlenecks that limit GPU cluster performance. So in other words, they make stuff that allows GPUs to talk a lot faster and support AI model use. It is expanding its product lineup to get into some more traditional networking areas. So if you want to get into the weeds of it, there's the Aries products, there's the Taurus, and there's the Scorpio. Those last two product categories are relatively new. They should each drive about 10% of revenue in the upcoming year versus really not even being available a year ago. So Astera Labs is, diversifying its product lineup quite a bit. And as you can see, the stock is doing very, very well. If you want something with an AI angle to it that is doing better than most others out there, then Astera Labs might be the one for you. All right, guys, that is it for today, and I hope you have a wonderful holiday. Mike will be back next Thursday or Friday with the last weekly video of the year. And of course, all of us here at Cabot are wishing you happy holidays, and we will be talking to you soon. Take care.